Okay, hi there traders. Welcome to Trader Structure. It's a Monday, it's start of a new week, so we're going to run through what happened overnight we'll go into the weekend, US markets and European markets. So it was a big session in Europe. They got absolutely hammered. I think that both the DAX and the FTSE, the UK index, were both down over 3 to 4%. So I think the FTSE or the DAX was actually down over 4%, which is, in anyone's terms, that's a big move down. So US actually held up quite nicely, and we're looking at the SPY here, the ASX, that actually held up a lot better than what I would have expected considering. So it seems to be whether it was just hold up and they're squeezing out some shorts so that they can, the market actually opens up okay today and they sell into that. Who knows? It's a very uncertain market. They had US payrolls come out on Friday night, and that was a lot better than expected. So I think they were expecting 407,000 new jobs. It came out 678. Now that's a big, big number, okay, of new jobs, and that beat expectations. And the interest rate, sorry, the unemployment rate went from last was 4, expecting 3.9, and they came out at 3.8%. So with regards to inflation and jobs and everything, the US economy is ticking along nicely. Inflation is really kicking higher, and you've got on top of that, you've got oil just going bananas, rallying hard. So the fears are obviously there's Ukraine and Russia tensions that continue. Okay, they're pushing that fear-based selling into the market, and on top of that, you've got inflation, which the Fed was said was transitory. It's just getting worse. Okay, so we're going to talk about this each day, but it is getting worse, and that big number that we're expecting, that we're waiting for on Friday, the market was waiting for, come out a lot stronger than expected. So it's showing that there has to be some sort of action from the Fed with regards to rate rises, which whether it's going to be a double rate rise, 0.5% or so, don't know. I think the market was expecting half or 2 rate rises, double that up in one hit, but the Fed is really, really reluctant to do anything like that. Reluctant to raise rates as it is, I think. They don't want to shake the tree and see what falls out at the moment, but it's not looking too crash hot. So those numbers were strong. I expect that fear based. Now, in saying all that, the market is well and truly based to the downside. That I think fear sentiment is quite high at the moment. Volatility is high, everything's high. So there is the opportunity with everyone positioned one way for a massive short squeeze. Okay, so that's squeezing higher because everyone's loaded short, and the algos will like to trigger that. Your instos will trigger that. They'll try to trigger that as well. So just bear that in mind when you're shorting into the market on lows. Okay, so the Aussie market, you can see this is the 5-minute on the SPY. This was into our close. It's sort of, I think it, where was it? The open was around here, just in here. So it popped up into this 71.02, flushed out, and come straight back up again. And on the open, the European session, we come and retested that level. Okay, and remembering Europe was coming under the pump from around 7 o'clock. So that's here. So the Europe come under the pump. They got smashed. US opened down. US basically went sideways, and we ramped up into the close. So it's a strange close. If you ask me, strange close into our Aussie market. Obviously, there's a bit of love into commodities at the moment, which we are potentially supporting, and there's every reason why shorts can get squeezed out. But for now, I think if that fear starts to increase, then forget about commodities and things. People want to exit stage left. We got this is the ASX. This is on the 30-minute chart, so you can see that action after the big sell-off has been quite choppy, but it's holding. So you get these deep corrections down, which is holding a slightly higher level. So higher low, higher low, higher low. And higher low in here at 70.25. So whether we pump up today and flush into 71.62 on the open will be interesting to see, or whether we actually gap down on the open because of what happened in Europe. People have had the weekend to take stock, see what's going on, and say, okay, that little pop up into 71.20 above 71.20 is a bit of it's more of intraday flush. Okay, so anyone that was short in here just got squeezed out. Okay, as opposed to people initiating new long positions because they're expecting the best. I wouldn't be initiating long position to the close because on a Friday night, expecting that you got over the weekend things to kick off worse in Russia. So that's not what it was to me. It's more of just a big short squeeze. Sellers in here got squeezed out into the close. So it's whether we open around the 71.20 zone or and then maybe hold that and ramp up to 71.62 before we find some selling pressure coming later on, which I wouldn't be surprised about at all. Dragging all the retail on the open and then selling to them. Asian markets, you can see very weak, and that has been a trend for quite a while now. This level, this is the Hang Seng level on the daily chart, so it's lows from, I'm not sure, long time ago actually. I thought I had the date in there, but selling has been quite quite constant. Okay, so I would expect that we're going to flush down to 2130, 300. So that's not. I mean, it looked like a while. Look, it was about 1,000 points not long ago, a few days ago, but now it's only a couple of hundred points away. So that open could easily flush down to there. Now, if it flushes down to there, I'll be looking for that level to hold because beneath it is not much, okay, in the way of support. So it could easily flush through and start to hold. I'll be looking for something like maybe if it does that kind of action and then start to hold that level, we might get a bit of a pop. But at the moment, the market is negative, and this could all be in one session before we start to rally, have a bit of a pop up, and then dump in the second session into the European Open. So there might be some bargain hunters coming to Europe because the DAX was down 600 points or so, I think. So yeah, it was a big session. Let me just see. The DAX was down 603 points, 4.4%, and the FTSE was down 3.48%. So that's a lot on the indices. So it could be a bit of bargain hunting in the European Open, which we may anticipate in Asia. Japan. So again, same sort of thing. You can see that bias is down, well and truly down. I'm expecting that this sort of acceleration you've had to try to go higher, and it's been a bit of a grind. I'm expecting a bit of a push back into that 25,730 area. Okay, so this was the open of the Asian market, of the Nikkei anyway. It got thumped on the open, so it went straight through that support zone. So whether we get a bit of that and we flush down to 25,640 before finding a bit of a base, or this could be a higher low. I mean, just beware of everything. Just make sure you know your levels and then expect what's going to happen. So I would expect that maybe a lot of work was done on Friday going into the European session. That could be why the European markets got hit so hard. But yeah, I'll be wanting to see if I'm going to go long. I really want to see some sort of pop up and then a high low, okay, before I even think about getting long. All right, Dow. Dow held at this level 33,710 and tested into, we've tested a few times now, flushed it, and we tested in there prior. That was in the Asian market session. You can see that was about midday on Friday, Sydney time, and we retested that level 33,285 just after the start. Well, a few hours, about an hour and a half after the start of the US session. So potentially got a higher low. Potentially we want to squeeze some of these sellers out, but we'll have to wait and see. That's when you look at it this way: sell off, pop up. It's consolidating, so it could be potentially holding that 33,285, which means there's going to be a few shorts that could be lined up to get squeezed out with a pop. Okay, so bear that in mind if you're really getting concerned about the fear driving the market lower. There's always that outside chance that there is, when the fear is the highest, there could be a reason to pop, and everyone's biased one way, as in biased down. There could be that easy, bit of a flush higher, okay, bit of a drive higher, and then it flips over. Everyone gets squeezed out. People start to go, we picked the bottom, and then they could sell into that. Okay, so it is a fickle market, and it's driven a lot by these computer systems, algos. But you just could be, if you're wary of that, you can trade around it. So that is, the Dow. I would expect potentially through the Asian market session it might open a bit negative. If we do continue down, I'll be watching the Nikkei open and then the Hang Seng open just to see how we sit and to see obviously how we sit as well in the in the ASX 200 coming into that. Now the tech. US tech, which is the Nasdaq, it's looking a bit more heavy, which you would expect that to be a lot heavier than others because it has had a good ramp up. They're obviously very concerned about inflation and interest rate rises, and the more inflationary pressures we get, the higher the expectations for rate rises to go, or the faster, which means the faster to the downside I would expect on the Nasdaq. The selling coming into it. So again, it's holding that 13,760 zone, which has held a few times. You go 1, 2, 3, 4, 5 times now. It's starting to hold that, but it is getting pressured down. First few times I was holding it was on a bounce. Okay, we bounced, then we started to hold this level 14,320. Now we're holding lower highs into the level. So that's a lot different to what we saw the action previously. We're on the way down. All right, so that I would expect we're going to push through this zone. I think the inflationary pressures are far too high for it. I think expectations for rate rise in the US are too high. US dollars rallying. Look at the currencies, which we will do in a second, getting hammered. Euro got hammered, pound got hammered, so that's all US dollar action, some safe haven. But that's for the tech. I'm expecting that to continue to find some pressure. Now, European markets, you can see a 15-minute chart. So Europe opened around here, had a little pop-up, which we tested into these highs and then failed. So it was pretty much all one-way action after that. Got sold right down. That was just after the open of the European market. So the index opens at 7 p.m. Sydney time, and it's an hour before that the futures market opens. So the hour before is a bit of argy-bargy, a bit of positioning coming into the index open when the shares actually start trading. Okay, and that's once they started trading, it was all one-way action straight into this support. Now this is a big daily level. It's not a massive level like the FTSE, but it's kind of an inside level. The DAX has been under pressure for a bit more pressure compared to the European counterpart in the UK. So that is a minor level, whereas you go and look at, once we look at that, is more of a major level on the FTSE. Okay, so either way, the pressure's down. Wouldn't be buying off that support there. You want to see a flush before you think about getting long. You want to be working off higher lows, especially when the market is heading south. Okay, you want to work off higher lows, not just pick a level and start to buy off that with no real confirmation, because there's no, at the moment, there's no confirmation that level is going to hold, and you only get that when you get a higher low. Okay, so I'll be looking for that into the close. Sorry, from the open, see if it can actually flush. You might get opens lower, comes back down, and then we start getting a bit of chop around here, anticipating US going to break, and then I'll be happy to trade off that high low there. Okay, UK, this is more of a daily level. Okay, daily lows, I won't go back and show you, but that's the daily level through 69.80. Flush that. So if we start to bounce back up here in anticipation of some bargain hunting, I'll be looking for something like that. Okay, because it can easily be a trade on the upside, so bargain hunting, but that trend down is still intact. Okay, the trend down really is intact from about this level, or maybe got this level down here at 70.65. So we could bounce, and you can see you can get 20, 30 points intraday off that quite easily before we actually even think about, we don't even break the trend and we turn around and head south again. Okay, but for now it is in a daily support zone. Currencies, like I said, US dollar finding a bit of a safe haven as well. Got bid up, and that also on the back of the numbers that come out, employment data out in the US, which smashed expectations really. They didn't just beat it, they smashed it. So that you can see that's the Aussie. It's finding a safe haven bid there. It's got flushed down, and that was on the open of the US market. So it did get pushed down on the back of that US dollar buying, but then it's bounced straight back again as commodities got bought up. We're pushing up to these highs at 73, 76. So it's found some love. Okay, this here, you see this trend line coming down is a daily level. So I would expect, you should see the daily level from here. You see that trend line coming down. So I expect it's going to find a bit of, it's maybe stalling momentum if we start to push too much higher. Okay, so I wouldn't want to get long considering what we've done here. And the higher low to work off is way down here. I'm not going to get long when you've got a higher low so far away, really, 73, 76 down to say 73, 20 or so. That's a 50-point drop. So I wouldn't be getting long up here. I'll be more inclined to be looking for a short and a bit of a squeeze on some of these longs. Okay, squeeze on the longs. If it wants to go higher, you probably find that it'll squeeze the longs out, drift lower and then ramp up. Okay, but if it does start to just spike in here and fade, I wouldn't be getting long on that break. I'll be just looking for that retest for confirmation if that's going to happen. There's no reason why I can't pop up, pull back, retest, and break. Break that level doesn't mean anything until it's reacted down off it. Okay, so that could be a reason. Then you know exactly where your risk is. It may not go anywhere. It may go somewhere. But if you want to take that risk to get long, then fair enough. Otherwise, I'll be looking for something, maybe like this to sell into. All right, Euro hammered. So I wouldn't personally be looking to be selling into that. This could just grind higher, so I'd be waiting to see what happens coming into the European session. But you can see it's copped it a bit, and it could go further. This is a daily level. Daily support zone around 107.70, say, and then we're 109.27. So there's a couple of hundred points, well, close to 150 points or so away on the downside, which could easily do. So if we get more of a grind higher, we do something like this, then I'll be looking for a lower high and pressuring down just to see if that US dollar buying continues, the safe haven buying continues, and that means that the euro is heading south. But it had got the potential to pop all the way back up here because it could just squeeze out some of these short sellers. Now it's a bit of a capitulation move, so I would expect more of a grind, a deeper correction of that move down before we get any sort of short potentials. Pound, we were talking about this for a while now. Low, 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 low. That was all looking good for a bit of a base build, but the problem is we've got this lower high at 134.07, which I was talking about I think on Friday, and we got that market really start to get hit. It was probably from the start of the European session. So this action through here was, this level here I was talking about. If it does hold and we start to get lower highs, there could be a test back into that level. Didn't expect it to get smashed like that, but the momentum is definitely well and truly down. So until we get, and that looks quite weak too. This, like we got that leg down, a lot of chop around these zones, lower high, lower high, lower high. So this level could easily extend a lot further down. I haven't got a daily level to look from, but you can see that if we get a bit of back and fill, meaning we sort of grind our way back up to this zone at 32.77, we could easily get a short off that level. But I would suspect that's going to be into the start of the European session. And if it's a bit of bargain hunt to the European session, I would expect this to be a bit of a grind back up again. US yen. So yen safe haven buy really has probably drove this down. You can see a bit of a sell off here. That was start of the US session. Got smacked back down here. Reacted up and off 114.71. So it could easily sort of chop around here and bounce back up. So I'd be looking for here a bit of a grind, bit of back and fill back up. Now gold had a good session. Now we spoke about this, I think, on Friday. Put out a note in our Discord channel to look for a buying entry setup, which played out nicely. Probably kicked off somewhere. What time is that? Oh, it was going up here. So you're looking at these higher lows. Confirmation extended into that 1973 zone. So today I'll be looking for potential a flush up through the level just to take out some of the stops above that level. You know that anyone that's shorted potentially into there is going to have stops just sitting above there. Could get targeted with some lower highs, pressuring back down again. Or if we don't target those and we have a bit of a pullback, we start to build another high low, then I would expect it to go up and through that level, 1973. But it's looking good either way as a safe haven, continued safe haven bid. That price action up here is a lot better, a lot nicer looking. I just wouldn't mind seeing a bit of a flush just to take out some of these longs before we build a higher low to potentially get long into. Oil, just going nuts. So that was a big spike for a daily level of about 110. Held that 110 low zone and gone higher. Okay, so no reason why this just can't keep going, dragging higher and higher and higher as long as the war continues. There's no real end in sight at the moment. I would expect oil just to continue to chop higher. Okay, so for me, especially after it held this 110, we chopped around here. The way it's held that, I would expect that to just pull back, build a higher low, and keep going through up 116.20. Copper, getting some love as well. We saw this level hold around that 103 area, push up to 106, 107. It's extended. That's a high I've got marked up from the 10th of the 5th last year, 10th of May. So I would expect some sort of reaction in there, whether we flush up and through and then find some lower highs to squeeze back out, just to take out some of these longs that are built up right off this support zone. But I do expect some sort of either profit taking or sellers to come in and try to short it and move it down. Okay, Bitcoin and Ethereum, they didn't do too much on the weekend. They got smacked down into the close of the US session. Bitcoin down to that 38,850 zone, and Ethereum sort of comes down to support zone around 25.90. They really did chop around here for 2 days over the weekend and didn't do too much. They could be that we might get a bit of a flush, a bit of a bounce, and then get some lower highs to work into later on. But for now, that move down is extended. You want to see how it works its way out today. That's all I want to talk about, guys. Thanks very much for joining me. I hope you enjoyed that. And remember, leave a like if you can, if you feel like it was worthwhile in the YouTube channel. Check out the YouTube channel if you haven't. There's a lot of information on there. There'll be more to come, some live trading material there to look at, and just some educational videos, which we'll be adding to down the track. So like I said, if you enjoyed that, leave us a like. It'll be greatly appreciated. And stay safe. Okay, that's the main thing. Stay safe in your trading. Know where your risk is.